this is a quick overview of how insurance works. This is just good information for you to know going forward. Your auto insurance is comprised of many different facets within the policy. So we'll go through each one of them for you can better understand how this works. The first process is, the first part of your insurance policy is PIP, personal injury protection, and that's mandatory in Florida, and the mandatory limit is $10,000. That means $10,000 of coverage. That means that for $10,000 you can get medical payments and lost wages, 65% of your lost wages paid if you're involved in an auto accident. The second part is collision, common collision. That means that whenever you are involved in an auto accident, your insurance company can pay for your repairs to your car. Now, all of these have deductibles. Sometimes they have a $500 deductible. A common collision usually has a deductible. Personal injury protection usually has a deductible as well. The deductible is usually $1,000 or $500, depending on what you chose when you purchase your vehicle, or sorry, when you purchase insurance. The third is property damage coverage. Property damage coverage covers the other person or the other items that you may have damaged. So, for example, let's say you were an at-fault party. You crash into something else or somebody else. Your property damage will cover their damage to their vehicle. It does not cover your damages to your vehicle. That's where the common collision comes in from. Uninsured motorists. Uninsured motorist is a coverage that you have if the person that hits you doesn't have the insurance required. And the insurance that they need required is bodily injury. Bodily injury is, and we'll cover that in a minute on yours, is basically what we use to make a claim against their insurance policy for your pain, suffering, damages, and things like that, for you as a person. And then coming to bodily injury. Bodily injury, going back to, is the same thing. If you were the at-fault party for whatever reason, is wherever the other side will be making a claim against you for their pain, suffering, and for their body, for their person as well. That's bodily injury. Uninsured motorists, going back to uninsured motorists, is the coverage that if they do not have enough bodily injury coverage, and I'll give you an example of that. Let's say they have a $10,000 limit for bodily injury coverage. That means that the only amount of money that you can get from the insurance company is $10,000 of coverage. But let's say your injuries are worth or valued at $50,000. Well, the first $10,000 will come out of the other side, the at-fault party, the $10,000, and then your insurance, which is an uninsured motorist, that's a thing that you carry under your own policy, the non-at-fault party, they'll value the case, and if it's valued at $50,000, they would pay the $40,000 of coverage, being that you have that amount in your policy. So with uninsured motorists, you can actually buy more uninsured motorists. So it's either underinsured if the other side doesn't have enough insurance, or uninsured, meaning that they don't have insurance at all. Yes, it is a shame that your insurance has to pick up the tab for other people, but unfortunately, many people in Florida do not have the bodily injury coverage. So when you're seriously injured or injured and they don't have the coverage, you're almost out of luck, because if they don't have the coverage, there's a good chance that they don't have any assets either. Because if they don't have bodily injury coverage and they don't have any assets, it's very difficult to seek remedy for your injuries and for your case, seek money for your case for a settlement, if that person doesn't have the insurance to cover. So we look at your underinsured or uninsured motorist coverage. And then you have rental coverage. As you already know, it provides you rental coverage for X amount of time if you're involved in an auto accident or if you need the car. Many times the rental coverage can come out of the bodily injury coverage on the other side's policy. But going back to the same thing, if they don't have enough coverage, and then at that point you might run into the problem. And then sometimes the rental car coverage on the other side, the at-fault party, will be very limited. So if your car is totaled and it takes a while to fix it, you may be limited to a week or two that you'll be covered on the other side, and then you're going to run into that problem as well. And then you have gap. Gap, you do not buy when you purchase insurance. Gap, you buy when you buy the car brand new from the dealership. You pay $500 approximately. It could change, and it's just a one-time thing, and that covers you from the value. The insurance company, if you're going to involved in a car accident, will only cover the value of the car. Gap will cover you on the offset. So for example, let's say your car is worth $10,000, but you owe $12,000. Well, the other insurance company will pay back the $10,000, but then you have a $2,000 deficit. Well, Gap should cover the $2,000 deficit, and that way you can pay off your loan. You won't walk out of cash in your pocket, but you can pay off your loan. Now, if your car is, going back to a $10,000 example, if your car is $10,000, let's say you owe $10,000, but your car is valued at $12,000, and at that point, Gap wouldn't kick in, but you're not upside down, and you'll get the difference in the check. So that's basically how it breaks down the insurance policies, how it sits as far as the different aspects and the premiums. This is important to know because all this will come up during your lawsuit. If you have any questions on this, of course, you can give us a call, 813-421-3411. Thanks.